Following in the cues of global markets, the benchmark indices, the Nifty 50 and the BSE Sensex are seeing weakness in trade on August 5th. The Nifty has fallen more than 400 points, with the volatility gauge, India VIX, surging over 18% as anxiety reigns high. Let's take a look at all of the top factors that are driving the bears in trade today. The first, recession fears in the USA. There are fears of the USA entering a recessionary phase, with an indicator known as the SAM recession indicator flashing above the 0.5% mark. This indicates that there is a strong possibility of a recession. Since the 1970s, this indicator has never failed and it has always accurately predicted the start of a recession, including the global financial crisis in 2008. But what has led to the indicator being triggered? The US experienced a massive hiring slowdown in July, adding only 114,000 jobs as compared to the 1,500 jobs seen last year. Additionally, employment has jumped to around 4.3%, which is the highest since October 2021. International brokerage Goldman Sachs has increased its prediction of a US recession in the next 12 months, up from 15% to a whopping 25%. The rally in the global stock markets has been driven mainly by the consensus expectations of a soft landing for the US economy. However, with recession fears, this expectation is faltering, and all of the factors combined have contributed to a negative investor sentiment. The US markets toppled on Friday, falling from all-time highs. The second factor driving the weakness in the markets, as well as the Japanese indices, is the Bank of Japan policy. The US markets aren't the only ones that saw weakness in trades. Japan's Nikkei 225 is also struggling ever since the Bank of Japan raised its benchmark interest rate on Wednesday, the 31st of July. The value of the Japanese yen higher against the US dollar. Before the hike, as a result of low interest rates, even negative interest rates, the Japanese yen was used in a trading strategy known as the carry trade. This entailed borrowing in the yen and investing in higher yield assets. But once the Bank of Japan decided to raise its interest rates, this caused a lot of pain to traders employing the strategy, as the cost of borrowing the yen has gone up. This has also caused a further disturbance in global markets. The global markets are also looking at Iran and Israel tensions. Tensions in the Middle East are surging as Iran, Hamas and Hezbollah have vowed to retaliate against Israel's assassination of military chiefs. Any escalation in the Middle East would send oil prices surging. However, oil prices are currently at 8-month lows as demand wanes. Therefore, the Middle East will be closely watched for any further cues on Brent crude prices. The fourth factor pushing the weakness in the Nifty today is the tepid Q1 show. Amid a poor deal environment, record heat wave and lackluster demand, the earnings growth for the quarter ended June has been relatively weak, falling around 2% on year according to Motilal Oswal. For the 30 Nifty companies that have reported their June quarter earnings so far, there is a 0.7% on-year growth. However, on a sequential basis, the earnings have fallen by 9.4%. The aggregate performance was hit by a sharp drag from global commodities. Heavyweights such as the HDFC Bank, Tata Motors, ICICI Bank, Maruti and TCS have driven the aggregate earnings. Growth has primarily been led by the BFSI and auto sectors. And the fifth final factor driving the weakness today is the absence of fresh near-term triggers. Investors were looking towards the earnings season, the US Federal Reserve, and the budget to provide further cues for the market. However, with all of these completed, the markets are lacking any fresh triggers that could drive momentum going forward. So, with these 5 factors, the Nifty has seen a drop of over 400 points today, with all of the sectors and the broader markets trading in the deep red.